Moving forward, students, lecture number 2 on bad debts will talk about how do you make the T account of the bad debts, because you have already done the journal entries now. Okay, so let's talk about how do you make the bad debts T account if they ask you, and in some of the cases they will definitely ask you to make the T account of bad debts. So it's a very simple understanding of for the T accounts of bad debts. That is going to be, first thing we need to understand that bad debts account is basically it's an expense account, right? And it's a temporary account. Okay, so temporary account are those accounts that will not have the balances, right? That will not have the opening and closing balances. So it's a temporary account, and that is why there is no opening balance brought down, balance carried down. Those things are not there, and you need to understand that temporary account will only be made when it is the requirement. Okay, temporary account is only made when there is the requirement. Okay, so if in particular year, for example 2020 to 2021, in that particular year, if there are some customers who are going bankrupt and they are not able to pay, or usually in the case of COVID we have seen that a lot of customers, your debtors, were not able to pay the debt. So in that year there will be a lot of bad debts account for the customers. Okay, so only made when it is required. Okay, so how do you basically make the T account for the bad debts? It's very simple. You write all the debtors amounts here. Okay, so let's say Mr. X and Mr. Y, Mr. Z, any people. Okay, Mr. A, so all of them amounts will be coming here. So let's say that we already know that how much Mr. Y was giving. Mr. Y bad debt was $560. Okay, Mr. Y bad debt, and some amount for this one as well. Okay, so different amounts are there for the bad debts for the different debtors. Okay, so different debtors will have different amounts that they are being owing and bad debt they become. So you are going to add all of these amounts. Okay, so you are going to add all of these amounts and going to transfer them to the income statement. Okay, you are going to transfer them. So on the credit side it will come the value of income statement in the bad debts account on the credit side, because you need to understand that bad debts is an expense. So what is the final journal entry? The final journal entry will be, sir, that income statement, because it's an expense, so income will be reduced. Okay, it's a loss, so it will be counted as an expense. So income statement will be debited, income statement debited by that amount. Okay, and the bad debts account will be credited, as you can see that is happening in front of you in the bad debts account, that the bad debts account will be credited by the word of income statement against that amount that is there for the total customers, that those who haven't paid their debts. Okay, so it's a temporary account. It is only made when it is required, and there is no balance carried in the next year. Okay, you can write these things as well. Also, we need to understand that the total will always be transferred to income statement and it is recorded as an expense. Okay, the important thing is that it will be recorded as an expense and it will be transferred to the income statement as well. Okay, so hope students gets the understanding of bad debts account as well. How do you make it? And there is bad debts account, and then there is the concept also of bad debts recovery. Okay, so students, when we talk about the bad debts recovery account, we need to understand that bad debts recovery is basically when the old debtors or old customers, they decide to pay back their debt. Okay, so basically some debtors are honest and they are true and they want to pay off their liabilities. Okay, so maybe in 2015 they went bankrupt. Okay, or let's say the COVID hit everyone. So in 2020 some people who are very honest and they were doing their business is very good, but they went into bankruptcy. But now some after situation in 2023 2024, they are willing to pay back their bad debts. Okay, so that will be called a bad debt recovery, and it can also be tested. It is not tested much in the exam for the AS accounting, but it's still mentioned in the syllabus. As you can see that irrecoverable debts recovered, so you can be asked on this. Okay, so irrecoverable debts recovered, so that's what we are discussing, that bad debts, or the other name of this chapter is irrecoverable debts as well. So let's write down that name as well. So we have irrecoverable debts as well, that is recovered. Okay, so what's the definition for the irrecoverable debts recovered or a bad debt? It is basically when old debts are being paid off. Okay, when old bad debts are being paid by the customer, when old bad debts or customers decide to pay back their debts. Okay, so customers, they decide to pay back their debt. So there will be a T account for this as well, and some journal entries as well, and I'll tell you the net effect as well for this. Okay, so when old bad debts customers decide to pay back the debt, okay, so these concepts can be applied. Okay, so how you're going to do it, as I said that the year will differ as well. Okay, so it's going to be step number 1, that is going to be that you are going to first reinstate the debt. Let's say that the customer went bankrupt in 2016 and now they are coming back in 2020 to pay back. Okay, so you have to, first step will be you reinstate the debt. So that is going to be that you mention the debt again, that this person, that is basically Mr. X, or let's say this time it's Mr. B. So Mr. B is coming back, so that person will be, account will be debited, and bad debts recovery will be written as credit, that we are making a bad debts recovery account. Okay, so bad debts recovery will be credited. Okay, then step number 2 will be that, sir, because you have reinstated, because you are going to receive the money, right? So you are going to receive the money now, so it will be receive the fund. Okay, so you are going to receive the fund, sir, here. So it's going to be receiving the fund. So your bank and cash, because you are receiving it, so your bank and cash will become debit. Okay, so bank and cash will become debit, and the person who is paying off the debt will again become credit. Okay, like just in this case we have Mr. B, so we receive the funds. Okay, so bank or cash become debit, and Mr. B, the customer, the debtor who is paying off the bad debts now in the later years, okay, so that will be credited. Okay, so Mr. B, the debtor, will be credited. Okay, and the last step will be, that is step number 3, that will be simple as well, that you are going to transfer to the income statement, because this is now becoming an income account. Okay, so students need to understand that previously bad debts was an expense account. Okay, as in the case here that bad debts was an expense account, but now bad debts will become an income account as well, and that will be the step number 3, that you transfer that to the income statement. Okay, so that is very important understanding here, that you will transfer to the income statement, and this time it will be written as an income, right? So this will be the very important adjustment and the effect as well. So you are going to say that, sir, because this time it becomes an income, so you say that bad debts recovery will be debited, bad debts recovery account will be debited, and the income statement, because it is an income now, that will be credited. Okay, so income statement will be credited now. Okay, so this will be the journal entry, that bad debts recovery account debit and income statement account will be credited. Okay, and if you want to look at a representation in the T account, so that's going to be also very simple. It's going to be just the opposite of that. You're going to say that this is, sir, bad debts recovery account. Okay, and you're going to change the nature of this account by saying that it's now an income account. So you can see whatever journal entries I've made, I'm going to put that. So bad debts recovery account is being credited by Mr. B. So Mr. B will be credited here now, because he is going to pay the funds to us, and the income statement will be debited. In the bad debts recovery account will be debited by income statement, because income statement in its original account will be credited. Okay, so students need to understand this logic and this understanding here, that the bad debts recovery, and I'll tell you the net effect and the main adjustment or the main effect that you have to do as well. But I hope students getting these information, that the bad debts recovery is one thing. First, the nature. What is the nature? That a customer is coming back after a couple of years to pay back their dues, because now their situation is good and they have recovered from their bankruptcy. Okay, so bad debts recovery, first thing सर ये एक income account हो गया. तो आपने किस तरह इसको रिकॉर्ड करना है कि डेफिनेटली जब वो that the customer, the debtor is coming back to pay their debt, so you are going to receive the money. So you receive the money, and that will be written as an income for you, because you are receiving the debt that was previous. So you because आपने इसको cancel कर दिया होगा bad debt, you state off, you cancel the bad debts in the current year, so you are going to reinstate the debt, receive the funds, whatever the amount they are paying, you receive it, and then you say that it's an income for us. So that is basically transferred to the income statement. Okay, so if I say that what are the main two effects, if you don't have to, you might not be able to, they will not ask you in the exams to make the adjustments or to make the journal entries or T accounts most probably, but they can ask you in an adjustment. Okay, they can ask you what are the effects. Okay, so the final effects will be that, sir, there are two effects that everyone needs to do in this if you have a bad debt. So just remember these two effects and that will be okay. Okay, so the effects will be simple, that sir, it will be you'll have to add to the bank balance, okay, whatever you are receiving, that add the amount to the bank account, okay. So add the amount in the bank, okay. So you add the amount in the bank and then record it as an income, okay. The second effect will be recorded as an income in the income statement. So आप income statement को as an other incomes में record कर दोगे, record as income in the income statement, that is other incomes में जहाँ पर discount receive आते हैं, profit on disposal आता है, so we can record as income in the income statement, and you will increase your bank balance in the balance sheet, okay. In the statement of financial position you can increase your bank balance. Couple of important notes as well, so I would like to mention one of the notes as well in this. So the note will be very important note is basically bad debt recovery will not change the amount of receivables, okay. No adjustment in the amount of receivables, okay. You're not going to adjust the receivables amount, okay. So no adjustments will be there in the receivables balance, okay. So in the accounts receivable balance or the debtors balance, there will be no adjustments, okay. So students need to understand this. There will be no adjustment or no change in the accounts receivable balance. By balance I means the debtors का जो final at the end of the year balance होता है, you are not going to do the adjustment in that. And let's say at the moment I've talked about if the customer is coming after a couple of years, 3-4 years, 5 years, but if the person is coming in the same year, okay, if the recovery, let's say that the individual become bankrupt in January, month of January, but at the end of the year in November or December he is coming back to pay the money. So if the recovery is done in the same year, then you can use the same bad debts account as well, okay. If the recovery is done in same year, okay. So as I said, mentioned that this is also possible, right? Okay, usually the case is like different years, okay? Usually the case will be different years, sir. 2015, the individual, the customer, the debtor becomes bankrupt and they are coming back in 2020 to pay. But let's say that if the recovery is done, that your year ends on 31st December and the individual becomes bankrupt in February, March, but is coming after 6-7 months, 8 months to pay their debt. So if the recovery is in the same year, then you can say, then you don't have to make the bad debts recovery account. You can just use the same bad debts account, okay. Just a note is there, you can use the same bad debts account as well, okay. So that's the logic and that's the understanding of bad debts recovery. That completes our lecture number 2, which started with how do we draw the bad debts account as an expense and bad debts recovery account, that is an income account, okay.